Okay traders, welcome back to the channel. So I've had a lot of questions about how do I confirm my trades with entry models using order flow. So in this video, I'm going to show you how to trade fair value gaps correctly so you can stop getting, stopped out, and how you can train your mind to be patient, to wait for the right trades to happen. Now, with that being said, planning is super important. Right, so I'm going to skim through why this was a good level, right? So I'm going to go to ES, so the S&P 500 futures chart, and I'm going to quickly break down how I was looking at this trade from a ICT or just a higher time frame buyer's perspective. Now, if we look at the charts like this, we want to first identify what our key level actually was. So the key level itself was something like this, right? So we had a structural high, structural low, structural high, and then structural low. So this here was the tariff break, as I call it. Now, when we have a tariff break like this or any kind of major move in the market, you don't want to let these kind of major moves throw you off, and you don't want to treat them any differently to as if the market was just behaving anyway. So you don't want to let these big moves kind of throw you off. Now, the reason I say that is because if this is our structural high and this is our structural low, we project the Fib tool or the Fibonacci tool in the London and the New York session, right? From the high down to the low like this. And so what we're looking at now is two specific regions. We have a premium, which is up here. I'm just going to label this P for premium. And then we have a discount down here. I'm going to label this D. Now, this trade in particular was interesting because we actually came from a premium. So what we're looking to do is we're looking to sell from a premium. It's really that simple. So for those who trade ICT or smart money concepts, you'll be aware of the idea of the market moves up, the market creates a high, and then the market created a low down here. And now we're obviously we've retraced back into premium. So what's going on here from a smart money concepts perspective is we have a structural high and structural low. We're looking to sell in this premium, right? That's all we're doing. That is the logic here. That is about 90% of the work or 80% of the work. Now, once you've done that, we want to kind of analyze what was going on. And so the way that I like to do this is I like to look at previous levels that have given us reactions, right? So I do this via the order flow, and I'm going to break down what I mean by that. Now, when we have our key levels, we have our key levels marked out over here. So I had one key level from the 2nd of October, 2025, 2nd of October, right? So this was a key level that I was watching in the markets, right? So we had several reactions from this market. So I have made separate videos on why this was a key level. So we had a nice short from here. We had a nice kind of long from here. We had demand holding here. So in this particular case, we had demand holding, right? We had buyers in control, right? Demand holding, buyers in control. Same with here, buyers in control. And then of course we break through the level. Now, what's important to understand with this level is that it's a key level in the markets. And I love using these types of key levels that have given us reactions in the past. This is what I want traders to understand now. I want all of you to understand that if a level has given you a reaction in the past, it will give you a reaction in the future, or there's a high likelihood. And that is how this trade today was taken, right? So this level started, or this level was formed on the 2nd of October. My first trade on it was the 2nd of October. So what it's showing you, and what I want traders to understand, is that at this level, there were a lot of basically passive buyers that then flipped to passive sellers. And then on Wednesday, the 15th, we had passive sellers as well. So these big sell-offs will come at areas where the market is passively selling off, right? So when you have a buy trade, the market is obviously passively buying. So that's what we had over here. So just to give traders a bit more context, what's going on here is quite interesting. So I'm just going to replay price. And I get a question of how do I actually validate my trades, right? How do I validate my trades with order flow? So I'm just going to quickly go to the Discord and break down my exit. So sorry, my entry and my exit. So this was the trade I took. This was around 10 past 4 in the UK or 10 past 11 EST. This was my executions around 10 or around 10 past 11 Eastern. Went in with about 12 contracts in MES. Risk just above the zone, and I'm going to go through that zone, why the zone was so good for selling. So risking about 390 to make just over 1k. So I was really happy with that trade. Probably the best trade of the month, best short of the trade, best short trade of the month in my opinion. So we want to kind of understand what was going on here. So questions I get, right? I'm gonna tackle two questions that I've got from students or just people that I speak to. The two questions are as follows. The first question is, how do you stack confluences to your advantage, right? So I believe trading is a game. Once you accept that order flow is how you trade key levels, you want to stack confluences. So you want to stack confluences, right? You want to have things in your favor that is telling you to short. So that's the first thing we're going to look for, stacking confluences. The second thing I want traders to understand is this idea of being patient at your levels. And so I've got a question about this as well. How do you stay patient at your levels? Very good question. And I'm going to look to tackle both questions. So let me start by stacking confluences, right? So why was the market screaming short today? So just zoom out a little bit, right? Traders, I think they're too zoomed into the 1 minute, the 5 minute, the 3 minute, the S&Ts, the breaker blocks. You're too zoomed into a pattern, or you're too zoomed into candles, and you're not truly understanding where you are in the markets, right? Let's zoom all the way out to the 4-hour time frame. The reason I'm doing that is because if you look at the 4-hour, right? If we just take a look at the 4-hour, if we look at this, we have structural high, structural low, structural high, and then we had structural low over here, right? So we had a break down here, boss. And now from here we have a dealing range high, dealing range low. Now what's also important is we've come into a massive area of supply, or a massive bearish POI. The reason I say that it's a bearish POI is that we had this huge fair value gap. So this is from the 10th of October. I believe this was the Trump dump, and this was our level. So if you are a trader, you should glance on the 4-hour every now and then. There is a reason we sold off so heavily from this region, right? This was a 4-hour POI in the premium, right? What I mean by premium is it is above the 50% area, right? It is firmly in the premium. It is very much in the premium. We're reacting off a massive 4-hour fair value gap, right? So having higher time frame awareness is as simple as that. So when I see people talking about their higher time frame bias, this is how you form it. Now, if we go back down to the 15, we know that we've reacted off here and we've come into our key level. So to answer the question about stacked confluences, right? So whoever's asked me this question, I hope this will clear it up. What are the stacked confluences over here? So we're in a 4-hour premium, okay? Subsequently, like I explained earlier, we're in a 15-minute premium, right? 4-hour premium, 15-minute premium. We are at a key level, and I've explained what a key level is, but a key level is something where I've taken trades in the past, right? Taken shorts, longs, long positions. You're using the order flow to confirm these levels, right? You've seen a long over here. There was a good short trade I took here from last week. So this was an area of supply. And then of course we see price flipping to demand. Then on Tuesday, the 22nd, price was acting as a demand. So we use the same exact level. We buy or sell from that level. Now, the $1 million question is, how do you know when and where, or if you should be buying or selling, right? That is where the order flow and the confirmations come in. But until we get to, that's kind of question number 2. Question 1 is, how do we stack confluences in our favor? The way we do that is by looking at, of course, 4-hour premium, 15-minute premium. We're at a key level. We have obviously a 15-minute fair value gap, which is kind of what derives a key level. We're also above the weekly opening price, and this is very important to understand, right? This is one of my favorite topics in the whole of trading, right? So how does a weekly candle form? So this is the weekly opening price, right? So this is, of course, the high of the week. This is the low of the week. Now, these, of course, could change up until Friday, but the weekly opening price is fixed, right? So you want to be selling above the weekly opening price. One of my favorite concepts. So regardless of how you trade, if you can position yourself inside of a higher time frame wick, you will be successful, right? So you will be successful. So a quick tip for all the traders who are kind of interested in this, let me show you something. Look at the size of this wick, right? If you're looking to sell here, and look at the size now of the wick over here after the sell. You can see the wick expands. The wick increases in length and size. So what this means, or what you want to take away from this, is that the best traders can position themselves inside of a wick. And this is very important to understand. You want to position yourself inside of a wick so you can capitalize on the higher time frame candle expansion. This is what's important to understand, right? So look at the size of the wick at the start, and you can see here the market continues to expand lower. And this is where we begin to see the wick increasing in size, right? Very important concept. And I want every trader to appreciate this. So anything else we want to use to stack confluences, right? So we're in a 4-hour premium, a 15-minute premium, key level. Another confluence is the idea of sweeping Asia or sweeping liquidity, right? I like to use Asian liquidity. I like Asia. So in this case, what we saw is we saw London. Yeah, we saw London taking out the Asian high just over here. So this was our manipulation right there. I call this a phase 1 manipulation. The reason it's a phase 1 manipulation is that we have accumulation like this. So the Asian session will accumulate liquidity, right? For those who know AMD, this is our accumulation. So this here is basically Asian session. Now, when we see a sweep of the Asian high before we see the market breaking fair value gaps and retesting fair value gaps, I like seeing this sweep, right? This is telling me liquidity has been taken, right? Liquidity has been taken, which shows us the market is more likely to reverse. It's just a little confluence I use. It's not a major confluence. It's just something I like to see. I like to see price taking out the Asian high. It's a good confluence. So here we have multiple confluences to take a short, not confirmations, confluences. Big difference. 4-hour premium, 50-minute premium, key level above the weekly opening price, Asia. Now we're coming to the question that I think a lot of people are wondering. So here is the weekly opening price just over here. I'm going to take this off so it's a lot clearer. So we want to be selling down to basically where this red line is, right? So how do we know whether to buy or sell from this region? So I want to make a few things clear. I use the XXX model, and I keep talking about this in every video because I think the XXX model is super, super important. Now, the XXX model has defined us 3 things. We want to know where to trade from, we want to know what to look for, and we need to know why we're looking for it. Now, in this part of the video, we've actually done the the where. We know which key level we're trading from. We want to be trading here. Whether we go long or whether we go short, it doesn't really matter. Well, it does, but we use the order flow to confirm that. Now from here, we're going to be focusing on the what and the why. A couple of rules about this, right? A couple of things I want people to understand and take away from this. I do not trade at the initial break, right? So I am not interested in trading this price action, right? So if I go to the Discord, for those who've been following me along, you'll see what was going on over here. So just waiting for a retest. So this was around 10:33 Eastern, about 10:35 Eastern. Just waiting for this retest. If aggressive buyers get trapped at the blue zone, I will go short and target the WOP, which is the weekly opening price. So if we just take a look over here, let's kind of understand this order flow. Now, it's interesting, right? It's super interesting. I am fascinated by order flow. I've been trading order flow for 6-7 years now, and I am fascinated every single time I explain this or see this. I just love seeing this, right? So what is interesting is we have our initial reaction higher. So price taps into the zone. We obviously try to retest, we try to go higher, and we break below this level. What's so important to understand now is this. We see a heavy amount of aggressive selling that breaks below the zone, right? So aggressive sellers are being rewarded. Aggressive sellers are being rewarded. So if we go back now and kind of understand what was going on, right? One of my favorite and I guess one of my most fruitful activities in trading is getting these 2 charts next to each other and explaining to everyone what it means, right? So we see the sell-off here. This sell-off is the same as this sell-off here. They're the same candles, I promise you. Now, what was going on over here? Right, so here, we want to focus on what was going on over here in yellow. This is important. Also, we want to focus on what was going on in this region. These 2 regions are important now. So without even reading the numbers, you want to focus on what was going on here. We see a lot of blue delta, right? So we see aggressive buyers because blue delta means there's more market participants hitting the ask than the bid, right? So there's more aggressive buyers. There are more market participants hitting the ask than the bid. We see more aggressive buyers and sellers. right? It's that simple. So when I see this and then this, immediately what I'm thinking in my head is this, right? I'm seeing, okay, aggressive buyers failing to follow through. Aggressive buyers are failing to follow through. And I'm going to write that as well. Aggressive buyers failing to follow through. And so for those who've been watching some of my videos, this is what gives us confidence that sellers are in control, right? Sellers are in control. So if you're watching this now, take a pause of this and understand, right? This is what I look for. It's a game of patience. Now, another thing, let's quickly keep going over the order flow. Another thing is this, right? This is the official candle that breaks below the zone. This is the candle that shows us that the zone has basically struggled to hold up. Now, what's interesting is we see a pretty positive blue delta over here, and this is something that candles don't show you. So what we saw in this region, I'm just going to clone this, and also in this region, as we began to break below the level, what we saw was this, right? What we saw is we saw buyers trapped. Buyers were failing. Buyers were absorbed, which means passive sellers were in control of the price, right? Aggressive buyers were present, but the aggressive buyers could not break above the level, right? We saw a pretty heavy flush to the downside. When you see a flush to the downside with buyers, it shows you the aggressive buyers have not been rewarded. They have been absorbed, or they've been trapped by sellers, passive sellers. Passive sellers are driving the market down. So when I come to this level, I'm beginning to see sellers have taken control of this level. Now, what's also important to understand, if we take a step back, is yesterday we saw this level holding as demand. So I'm not going to show this on the order flow here, but in this region, we saw sellers not being rewarded. So sellers were sellers were aggressive here, the market moved higher. This means that buyers were in control of the price. But here, if we go to today's price action on the 1 minute, we see quite the opposite. We see a heavy flush to the downside. Aggressive buyers present, they're failing to follow through. Sellers are in control as the market moves down. And again, we know sellers are in control because of the order flow. Okay, because of this. Now, this is where it gets very interesting. So take a note of this. So we broke below this. So we tapped into the zone at 24 past. We break below the zone at 27 past. So let's just say at 25 past, if we round it. At 25 past or 30 past or 10 or half 10 Eastern, we're beginning to activate interest into this zone. So the question now becomes, how patient are you to wait for price to come to this zone, right? We're not looking to trade here, right? We're not looking to trade here or down here. We're not looking to do any of this. I want to see how order flow reacts at my key level. So if I don't get to my key level, I'm not interested. Okay, so I trade from one key level to the next. So in this case, what we had is we had a 15-minute fair value gap here, right? So this was essentially a 15-minute, the candle before the fair value gap. This is where I look to target. So all we're doing as traders is we're positioning ourselves on the right side of the market. So basically, all we're doing is this. All we're doing is we're looking to sell from this key level down to this key level. That's all we're looking to do. That's it. It's as simple as that. Now, where traders mess up is they try to trade in between levels. They don't confirm their levels. They jump in at a random level. And this is what I'm going to now look to answer and avoid, basically. Try to make you avoid doing this. So 27 past and 30 past, we had broken below the level. Now, what's interesting here is we tap into that level at 59 past. So basically 11 a.m. We had to wait half an hour. And I'm fine with that. All right, if you have to wait half an hour. So again, so if we go to the pre-market plan, this level was actually derived before the market even opened, right? Because the market opened here. Market opens at 9:30, right? Market opened here. So I had to wait an hour and a half, or even just over an hour and a half for my entry. I sat there and waited, right? I didn't try to trade here, right? I didn't try to trade here. I didn't try to catch a long over here. I didn't try to do any of that. This is my key level. And I promise you, if you use order flow at your key levels, you will have a much higher chance of deriving the right entry or the correct entry or the best timed entry. No, it doesn't give you 100% strike rate because you can be faked out, stopped out. The order flow may not work in your favor. But if you have your key levels, you have a fighting chance of making it work. And this is what we're going to go through. So for those who are asking me, when do I enter? This is what I'm going to break down, right? So do you all remember what happened at 27 past, right? So at 27 past, we broke below the zone. So I am interested in entering a short after a retest, right? So I'm not looking to go short here because there was no retest in the zone, right? So when price retests our zone, the red line I call my entry line or my break line. So this is what's interesting. I'm only going to enter short when price gets to this red line, right? The reason I do that is because I want to allow price to show me what it's going to do. So this is not a very good looking strategy in the sense that I'm not going to show you some lower time frame breaker or some nice kind of model, some 2022 model where it looks like this. This doesn't work, right? This doesn't work because the markets are not going to give you the same 2022 model or whatever it's called every single time. You're better off defining your key levels and then watching price action at those key levels. And this is what I mean by watching price action. So first of all, I've got my break line, which is here, right? So I'm going to even confirm that with the entry I took. So the entry I took was from the, where are we going now? Here we are. So the entry I took was at 67, 56. So it was slightly below this zone, and that corresponds to the break line. So 67, 56. 67, 56. There you go. 67, 56. So I want to enter here. So for those who are asking me, how do I stay patient at the level? This is how I do it, right? I'm not going to enter at the level. I'm not going to try and enter here. I'm going to try and enter here, right? After I see a break and a retest, right? So what do I mean by break and retest? This is what I mean, right? I mean break and then retest, and I let the market do its retest, and I will enter here below the initial break. Very important distinction. So I think that could clear up a lot of confusion as well. But from here, we just wait. So for example, here we go, there we go, there we go, there we go. So in this position here, I want to see what was going on. So for those who have an astute eye, I don't like to talk about wicks and bodies so much, but if you take a look at what was going on at this key level, let's have a key level masterclass. So this was your key level in blue. Entry at 67.56, stops above 62, so that's about a 6-7 point reward and a target at about 2.7 R. So really good trade. Now there's a distinction I want every trader to make, right? So when price comes into your levels, you are not going to look for a breaker structure or a fair value gap entry. I know some people, they look for breakers, they look for flip zone, they look for like I fair value gap, they start doing all this stuff over here, they start taking longs here, for example, they start doing all sorts of stuff. I have my level determined pre-market, so I am interested in shorting based off what price action does inside of the level. I'm not interested in longing or shorting based off what an ICT pattern does, and this is a big distinction. So what we can see is we enter the zone, we see a lot of blue delta, we see a ton of buyers over here. A ton of buyers over here. Now look at the top, just above the zone, right? Even inside the zone. What's interesting is we barely break above the zone. So I'm not advocating you use wicks, but I want you to understand what was going on inside of the wicks so you have a fighting chance of getting on the right side of this zone. So it's not about getting on the right side of the market. It's about getting on the right side of the zone. So once you have a zone, so that's where in the XXX, then you need to know what to look for, which is this. This is what you're looking for. So what we can see, I'm going to read the numbers out. 114 for 282. You know, we see a lot of aggressive buyers. A lot of aggressive buyers, right? A lot of aggressive buyers. Yes, there's an aggressive seller over here. But what's interesting with the aggressive seller is we're followed by a break to the downside. And then we're followed by 50 for 146. That's roughly a 3x, just over there. So in this zone, we had a massive amount of aggressive buyers, right? There were more aggressive buyers in this zone, and there were a lot of aggressive buyers just above. But we break below the level. we had one candle retest, and this here was the confirmation. So I'm going to break it down. So I'm just watching the candles, right? But I'm watching the order flow make the candles, not watching the candles and then trying to use order flow. No. I'm watching the order flow at this point. So I know I'm entering here, right? So a couple of things I look at. I do not look at the shape of a candle. I want to see a break above or a break below the zone. We barely had a break above. What also put me off from buying was the fact that we had finished auctions. So we had 0, 0, 0, 0, 0. We had a ton of zeros, which means that there were only aggressive buyers on the right hand side, the ask. There were aggressive buyers, aggressively buying, aggressively buying. We had about 6 of them, no 7 of them, no 8 of them. 1, 2, 3, 4, 5, 6, 7, 8. 8 finished auctions, which means buyers were aggressive at the top of the candle, and we kept breaking lower here, retest here and here, and that was my entry. My entry came at the break line. So this zone, who was aggressive? Buyers. Who was rewarded? Well, technically sellers, because we broke below the level. So who was trapped? Buyers. Who was absorbed? Buyers. Who was in the most pain? Buyers. Who's in control of the market? Sellers. It's that simple. So once I see that, I get interested in looking to enter after we break below the zone, right? So this would be my entry right here. So we're waiting for it there. As soon as I saw that, I'm comfortable to put my stop loss here, because there's a ton of zeros here. Don't forget, lots of zeros, which means the market's less likely to visit there. And once I have that entry, I was looking to target basically the low from down here. So about a 2 point, yeah, there you go. There we go. There we go. That was the execution. And that was the trade, right? That was the entire trade. So risked about 390 to make 1065. And the trade itself lasted about 15 minutes. So if you like that video, give it a like, give it a thumbs up, and I hope it helped, and I hope I answered some questions.